Welcome to Trade Simplify. Let's talk about mortgage. Should you pay off your mortgage early? Some people say never. Others say as fast as possible. And here's the truth. Both sides are right. And both sides are incomplete. Because this decision isn't just about money. It's about math versus mental peace. Margraf, the math case. Let's start with the numbers. If your mortgage interest rate is low, let's say around 3%, the math usually says, don't rush to pay it off. Why? Because historically, long-term investments have returned more than that. In simple terms, if your money can grow faster elsewhere, paying off cheap debt early isn't optimal on paper. Now flip the situation. If your mortgage rate is high, 7% or more, the equation changes completely. Paying off that debt becomes a guaranteed return. No volatility, no market risk. From a pure financial math perspective, this part is straightforward. Brain the part people ignore. But here's what spreadsheets don't measure. Stress, anxiety, and the psychological weight of debt. Some people sleep perfectly fine with a mortgage. Others feel trapped knowing they owe money for 25 or 30 years. And that stress has a cost. It affects decisions. It affects risk-taking. Sometimes it even affects health. So even if investing wins mathematically, it can still lose emotionally. And a strategy you can't stick to is a bad strategy, no matter how good the math looks. Puzzle piece. The real framework. So what's the right answer? Start with the numbers. Always. Compare your mortgage rate to realistic long-term investment returns, not best-case scenarios. Then ask a second question. How do I actually feel carrying this debt? The best financial decision is the one that balances financial efficiency with mental peace. Because wealth isn't just about maximizing returns. It's about building a life you can live with. Do the math.